It's all about the consolidation that we're seeing slowly and steadily in the banking space. First, we had a Citi and Axis Bank deal. Then you had the big merger news yesterday, and that's of HDFC and HDFC Bank. So that's what we're going to talk about on BNS and Lens today, isn't it?
Absolutely, Cheryl. And you said the most important thing, which is that this is causing a shift in the financial space, not just the banking space, but also in the NBFC space, because you're talking about the merger of two extremely large financial organizations in the form of HDFC Bank and HDFC. It's not only going to result in a change in the business landscape, it's going to result in the change of the benchmark also, because you have close to 15 lakh crore around of market capitalization that the combined entity will have. And so how will mutual fund schemes buy into this? But that's a conversation, I guess, from a perspective of another day. But let's talk about the business, and let's talk about the implications for the other entities as well. Joining us to talk about this more is Rajesh Agarwal, as well as Kunal Bothra on the technicals. Rajesh, I'll come to you first. Good morning, first of all, gentlemen. Particularly in the second one, which is the HDFC-HDFC Bank merger, you're talking about huge positives that have been pointed out by several people already with regard to these two entities or HDFC Bank. But for the rest of the sector, it's a bit of a jolt, right? Because you're talking about a huge expansion of network, you're talking about resources that will now be shared, and you're talking about a lot of streamlining that will take place. Of course, it will take a little time. But even in the NBFC space, how does one look at the entire scenario? What are the implications of this merger?
After this merger, there would be a lot of implication, not only on these two entities, but the entire sector as such. Because what I feel personally is there would be a fresh round of consolidation in the entire NBFC, BFSI sector, I would say, for the next 2 to 3 years. It would be survival of the fittest, maybe. And this consolidation would be driven basically by private sector banks. Because one, with the kind of buoyancy we are witnessing in the equity market, that would provide a great opportunity for these banks to look for inorganic growth route for acquisition of smaller private bank or even public sector bank, where the government is intending to sell out, for example, in IDBI case or much smaller case. What I personally feel is that the south-based smaller banks, which are vulnerable for takeover, would be prime candidates, because we have been hearing a lot of stories in the past also regarding some of the names like Federal Bank or Karnataka Bank, where there are no identifiable promoters. Moreover, if you look at the ROA, that's return on asset of many PSBs, like public sector banks, they are less than 0.2 or 0.3, and that's like they're struggling to run their business with this kind of large landscape going on with the acquisition of city banks assets by Axis or HDFC Bank, HDFC merger, or the scale of business of ICICI Bank or Kotak Bank taking over ING Vaishya in the past. I think it's time that some consolidation takes place. So I won't be surprised if some of the smaller names of South-based banks are taken over. So we will just have to wait and watch. And many smaller private sector banks which are struggling might be prime candidate for takeover. It's just a matter of time.
You coming in on the financial space, banking space, and NBFC space as well from Rajesh. Good morning, Rajesh, to you, and good morning to you as well, Kunal. And what's your take on this entire consolidation that we are actually seeing in the banking space? How does the Nifty Bank look to you, as well as the financials?
I think on the bank Nifty, we are still extremely bullish in terms of the view, because I believe that after what transpired yesterday, we typically see term it as a breakout move. Now, of course, because of yesterday's big unwinding pressure on the covering of short positions, you're seeing a mild bit of a downside on the indices. So that's okay. Looking at the two charts specifically, Axis Bank and HDFC Bank, look at the big broad consolidation. The last one and a half odd year from those 2021 levels, these stocks have gone into a big range for themselves. For Axis Bank, it was 650 to 850 as a range, and these are big ranges, and the stocks have tested both the ends of the ranges in the last one and a half odd year. So what we could probably transpire is a breakout for many of these banking stocks. Now we'll look at the second chart, which is an HDFC Bank. It's like a mirror image for the stock. But it's just that the stock has now come back to the higher end of the trading range, which is at the 1700 mark for itself. Now that generally indicates that if there is any kind of a breakout indication which could happen, it could be led by HDFC Bank because of the tendency of the stock coming first towards the big resistance breakout. So I think both the stocks and many of these other private sector bank names, they are now getting on the verge of a big breakout of a 1.5 year of consolidation. If that happens, it could bode very well for the entire banking stocks in the sector.